let's talk first of all about some of the key points that I noted in your report. First of all, there's the continuous improvement in loan growth. And just take us through some of the factors that are responsible for that, more so given the environment that we're in with the whole banking crisis, which hopefully should be coming to an end.
The most important thing for us to note here is that for Nigerian banks, for the banks to cover 9 Nigerian banks, loan growth has accelerated 9%, net loans. Okay, if you adjust that for loan sales to AMCON, loan growth is actually up by 14%, as a half year 2011. That's analyzing to 28% on a year-on-year basis. So loan growth for Nigerian banks after 2 years of very slow lending, okay, loan growth is finally happening. And the private sector credit data also, should I say, supports this statement itself. Okay, and the lending for Nigerian banks, there are key sectors that are driving this. Okay, so you have lending going to upstream, telcos, manufacturing, and also the public sector. It's actually the sectors that have driven loan growth so far. But more importantly, loan growth happened faster in the second quarter, okay, and that's due to post-election.
All right, let's talk a bit about the NPLs. Obviously, big issue that I think many people will be worried about is the fact that we're expecting further provisions after all that has happened over the last 2 years. But take us through some of the issues around that. I'm hearing that the big story in the Q3 would be provisions relating to Xenon Oil, an oil trader, and about $1 billion of exposure that about 5 banks are exposed to.
Okay. For NPL ratios for Nigerian banks, asset quality has improved significantly. Okay, there are still a few bits of cleanup that needs to be done, like the Xenon that you mentioned. But the more important thing is that NPL ratios are falling to a large extent. Okay, on the Xenon facility, what's happening there is Xenon is an operating entity. Okay, it's about the biggest importer of, should I say, refined products into the country. It's operating. Well, it happens that it had issues following the crisis of about 2-3 years ago.
Sharp oil price decline.
So if you the banks have exposure, there are 5 banks with exposure. There's Zenith, GTB, FCMB, Access, and UBA. Okay, they're all selling this facility to AMCON. Okay, this was an AMCON-led process with Xenon in agreement to sell. Okay, so the banks are all selling this to AMCON. Okay, this will be concluded in Q3. We expect all the banks to take haircuts. Okay, but the haircuts will obviously depend on who has relatively more collateral than other banks. Okay, but base case, we are estimating about 10 to 15% haircuts across the banks.
Obviously, not too significant, more so when you look at valuations of banks. And I noticed that for your 2011 earnings, you are looking at very low PE ratios, very low price-to-book ratios. Talk us through how good the buying opportunity is for banks right now.
For Nigerian banks, it's a situation where the valuations just don't have any momentum to push them to where target prices might be. Okay, you have crises in Europe. You have issues in the United States. There are downgrades happening every other day. So for in markets where foreign investors largely dominate trading activities, okay, in as much as the underlying positive trends of Nigerian banks are, should I say, apparent for, should I say, the keen-eyed investors to see, okay, the trading, or should I say, the fund flows needed to drive these valuations, higher, just isn't there. Okay, so it's not a situation where you're having massive sell-offs in Nigeria. Okay, the buyers, are just lacking.
All right. Yeah. Let's talk a bit about net interest margins and what's responsible for the improvement in that. It's quite obvious, really, with the rate hikes which we've seen all of this year to 9.25% just this Monday. But then the key question, though, is will the net interest margins continue to be this good come December 31st, when the market expects that interbank guarantees will be lifted as we continue to resolve this banking crisis?
I can speak more clearly for 2011. What's happened this year is the monetary policy rate has gone up by 300 basis points. Okay, cost of funds has gone up by just about 12 basis points for the banks to cover. Okay, meanwhile, asset margins have gone up by 60 basis points. Okay, so that has led to an increase in net interest margins. Okay, leading up to the takeoff of the interbank guarantee, like you mentioned, and the outlook for the market expectation is that interest rates should continue to rise. Okay, because the expectation is that risk will become better priced, or should I say counterparty risk. So the expectation is that interest rates will rise further. Okay, and if cost of funds do not rise, in magnitude terms relative to the increase in asset margins, net interest margins are likely to rise further. But we've seen a significant rise in first half, okay, such that you might not see a relatively higher rise over the second half of the year relative to 1H.
Okay, quick final point, and I'm coming back to the interbank placements again and the lifting of those guarantees. What are the headwinds that are left for this sector to really surmount over the next, say, 6 months to 1 year?
The most important thing is next week. Okay, the most important thing now is next week. We have general meetings happening at all the 5 banks between starting from Monday up to Friday. Okay, the shareholders have the opportunity of approving or not approving these deals. Okay, the rational decision clearly is for these deals to be approved. Okay, because it's a situation where if you do not approve these deals, okay, you lose everything. Okay, on the other hand, if you approve, you have a situation where you could actually still own a stake in the emerging institution, which will be bigger. So whether or not it's a better deal for the acquirer or not, this is a situation where just looking at the situation on the ground, okay, these deals need to be approved. Otherwise, you have a situation where you lose everything.